Hey, what's going on, everyone? My name is Sage, and today is March 27th. I'm going to give you the daily recap of things that I saw in the market and also share with you the trades that I took going forward. I think it's a really good idea for not just myself to journal my trades and be as transparent as I possibly can be with my futures trading, but more specifically, in going back and reverse engineering what it is that I'm doing, why I took the trade in the first place, so you can understand better on how to tweak what it is that you're doing. A lot of the common mistakes that traders have: don't know where to set the stop loss, don't know why to take a buy or a sell signal, or just don't have proper risk reward management. And that is the whole game. If you can understand those things, you can apply it onto any chart. You can basically trade anything. We would recommend that you probably should focus more on the indexes and things that have liquidity. The more explosive something moves, the higher the chance that you can have in catching a pretty sizable move. All of that stuff is important. So I'm going to share with you a couple trades that I took. I took in total 6 trades today. On my smaller account, I'm up $133. On my larger account, I'm just shy of $4,500. Cool. So I'm going to share with you what trades that I took, why it is that I took them, and then hopefully with, gaining some traction. You're not going to get it the first time. I didn't get it the first time, and I'm still looking to constantly improve what it is that I'm doing, using back testing and using always reverse engineering and going back to journaling my trades. I really hope that you guys are doing this with your own trading systems, because it is so important. Don't just walk away from the trading floor just because you took some wins or you took some losses and there's no afterthought. That's not what trading is. Trading is 95, maybe 99% preparation so you can execute when the time comes. Let's talk about this. We're looking off of the 3-minute time frame. I do want to share that I made just a little bit over $500 off of a trade that I took after market closed. So what did I see? I'm going to share with you guys just my setup overall. I'm using, of course, the voodoo lines. The voodoo lines, all that is just a fancy word for saying support and resistance levels. So you can notice that this is actually a level that I drew myself. I like to use the moving averages. You guys can see on my chart which stacks that I like to use: 5, 9, 13, 21. They're the voodoo lines. And then I like to use some sort of oscillator. If you're a trader that doesn't trade with oscillators, don't necessarily take my system and then use it exactly and then expect to have the same results as me. That's not how this works. Trading is all about you taking the bits and pieces of things that work for other people and then meshing it and making it very unique to you. Cool. I'm going to say that in every video because it's important. Sometimes we have first-time listeners and just traders, and sometimes we have people that have been following me for 5 years. So let's dive in here. The trade that I took right at market close, we broke below the support level that we had for the previous day. I'm going to put this on my chart as well because I do use it extensively. This is called a session volume profile. So the session volume profile for me had a volume node very close to, it looks like 125, right? So I'm not going to say the first two numbers, or you guys can see right here on the chart. So about 125. We didn't hold that support, but the low of day for the previous day session was all the way at 050. We broke below that support, and I was just paying attention to my moving averages and just the same indicators that I watch on a normal session. So where did my volume node take us before? Let's check out a couple days prior. I really don't have all that much support. So this level where I took my entry at is pretty arbitrary. It's arbitrary if I'm not using the voodoo lines. Hopefully I'm explaining this correctly. So let's remove that. You guys see that I'm using those volume profiles just to build some context. And then as soon as we started breaking very close to the snow line, I noticed that we were reverting price action. And how did I know that we were going to move? Right here, I caught maybe 60 points. How did I know that we were going to move 60 points? I didn't know. I have no clue. I never have any clue whatsoever how many points we're going to move. Me as a trader, I'm sure you as well, you want to take a trade and you want it to move 400 points. I mean, it's the most natural thing as a trader, but it's not realistic, right? What's realistic is catching 20, 30, 40-point move and then just being happy with that. You want to hit as many singles as you possibly can. Probably the best analogy that I can give you. So coming back down into what I perceived as a support level at 975, we didn't necessarily get there, but off of the 3-minute time frame, just check that out. If I blow up that chart just a tiny bit, I got my moving average cross. The 21 is probably the most significant moving average. There's so much data to substantiate that. 21 moving day average needs to be on your chart. Has to be. So that for me is that pink line. When I overcame the 21 with my 5-day moving average, it's okay if you don't agree with me on this, right? It's just how I trade. This is my back testing. This is sharing with you my strategy. When that overcame quickly, I'm looking at confluence factors on if we are starting to squeeze off of an indicator that I like to use. It's called a TTM Squeeze Pro. You guys can get this off of, just go into indicators and type in TTM Squeeze Pro. You guys can have the same indicator that I have on here just in case you're interested. So some of you might be thinking, Sage, there's no volume after hours. You're absolutely right. There's no question that you're right. But I'm employing risk reward principles, right? I talk about this in so many of our YouTube videos. And I talk about this all day long. It is the most important concept in trading. Never mind indicators. Indicators are, they're as good as, they're just tools, right? They're just tools. They're not meant to be the craftsperson. I'm the craftsperson. I'm the discretionary part of this. I'm the computer behind making all the decisions. I'm the person that's saying, okay, does this trade even make sense or not, right? AI is great, for sure. Automation is great too, but someone needs to program that. Someone needs to put the input in and ultimately have all these things that are intermingling and making that decision. There has to be a sequential order. We can still do that, right? That's why discretionary trading still exists. Anyway, sorry to go off on a tangent there. I was applying good risk reward principles. So where do you think I'm going to take that first off? I'm probably looking to take that at least maybe about 20, let's call it a 40-point move. I think that that's realistic, right? Context would take me where we sold off from. That was a pretty big drop after hours. So overall, I think maybe a target of 50 points would have been pretty good. So what is that risk reward? It's 3.5 to 1. It's already pretty darn good. I set a trailing stop loss, and that trailing stop loss was not triggered until we got back down here. So what is that point move overall? I got in right there, right? Literally got in at, looks like 0.35. And then I took that. It was 60 points. It wasn't 73 points. So it was a 60-point move, $500. I'm good with that. I'm perfectly fine with that for an after-hour session. That's great. So that's my first trade. Now, pay attention to where I take my triggers. My trigger is very important. You need to build context around everything, but the trigger is literally the thing that says get in or not, right? Either a short or a long position. I don't generally go into a trading session thinking short or long. I don't think that that is the right way to do it. I know that we're trained that way, right? It's constantly, what's your bias? What do you think? Where do you think NVIDIA is going to go? I don't particularly care off of the shorter time frame. I just care about a good quality setup. If that setup is fairly good quality, I'm probably going to fire on the trade. Today, I took more trades than maybe what I'm accustomed to. I usually take 2 to 3 trades, sometimes not even more than that. But I had good setups and I was up on the day. I didn't want to give back too much profit. I gave back a tiny little bit of profit, but not too much. So that was my first trade, right? Let's go to my second trade. So let's remove that. And then my second trade probably should have taken a short here. That would have been really good, right? Because it was adhering to some pretty good principles. But I waited for market open. I did exactly that. So what happened at market open? Looks like everyone was chasing shorts. I was not. I was not chasing shorts. I have a contrarian mindset when it comes to this. So we went into, finally, the snow line. Why is the snow line significant? It's okay if you're not using them, but I want to at least try to explain why I'm using the tools the way that I am in order for me to come to the decision of why I take a long or a short. That is more important than my bias, 100% more important. So we engulfed out of here. Am I taking the bottom of that wick or that candle? No, of course not. There is no systematic approach for me to pinpoint exactly the bottom of that wick. This would be called a V in trading terms. So I want to be on the right side of the V if I have a long bias, right? So now I have maybe about a 5% bias. Did I know that I wanted to take a long position? No, I didn't know that I wanted to take a long. Did I fire on a short maybe about half an hour before? I would argue and say that if you are following the videos that I'm going to be making, there's going to be hundreds of these videos. I really hope so, right? Because I want to be trading for a long time. I want to take the same trigger always. But right here, notice that the EMAs were crossing, but I have no squeeze. I have no volume. So I didn't really feel that trade. I said, it's fitting one of my conditions, but it's not really outfitting 3, 4, 5. I generally recommend 3 to 5 conditions that are being met in order for you to fire on the trigger. I know a lot of you are going to say, this guy's an idiot, right? Because it's too many conditions to make a decision. I would argue different. I would argue that it doesn't matter how I'm trading. It matters on you identifying the same triggers every time. So if it's price action, if it's an engulfing candle, if it's a Bollinger Band, if it's a Keltner channel, if you're trading ICT, if you're trading supply and demand, if you're trading smart money concepts, if you're using London session, whatever, make sure it's always the same conditions. That is the only thing that I will ever advocate for any trading system. So let's go back here to this example. Why did I take that? My entry was literally 030. That's literally what it was. So 030 is, let's move that a little bit lower. 030 is all the way back down here. Why did I take 030? I didn't have the confirmation off of this candle. Some people are going to jump into that and say, I'm going to take that engulfing candle because we clearly were showing bullish price action here. That's fine. That's fine. It's not my trading system, so I'm not going to take that. But what I will take is after this candle, I'm looking at my 5 and my 21 cross. I'm seeing that, and then I'm making an educated guess, a probabilistic guess as to, all right, I'm getting in here. How high can I actually take this? So let's remove the green lines because those are lines that I drew in. And let's just look at the voodoo lines, right? And I'm spending some time on this because I want you guys to get this for every trade. I want to be, and you guys can hold me to this. You can add this in the comment section. Nope, Sage, the condition that you took on this trade was not similar to the same conditions that you constantly talk about. So your trading system doesn't look like it's working very well because you're seeing where the wind is blowing. I don't want that to be the case. I want to be so consistent that you clearly say, okay, I see this trigger and I'm thinking of Sage and he's probably firing on this trade because this is how this is his method. This is his edge, right? So that's what I'm doing here. Why did I take that trade? That 5 is overcoming the 21. But check this out. The confluence factor, right? Confluence is just a fancy word for saying more than one thing is lining up at the same time. That confluence factor, boom, right when we were moving off of the momentum to the downside, we were firing on the squeeze. So we have some green dots. There is plenty of education here on YouTube on how to trade this. It's not my system. It's been around for 25 years or maybe around that time period. But overall, boom, you have 2 factors of confluence. So what did I say? I usually like to look anywhere between 3 to 5. I'm going to show you my chart here in just a second where I make that determination. On top of that, I have my CVD. CVD is just an abbreviation for cumulative volume delta. So you might say, Sage, I'm not a baby. I'm an adult, right? Make a lot of money with trading. You're talking to me like I'm in kindergarten. Only thing that I want to express here is that there are 3 factors that confirm the same thing. They're giving you the signal off the 3-minute time frame. However, I don't like just trading one time frame. I like to use 2. So I use a combination of 3-minute and sometimes I'm using 3 and 15-minute. So my chart looks like this. What my chart looks like when I took this trade. So I already outlined these, right, as you can see, and then I'm going to use the 15-minute time frame in order just to see where my structure is and how high or what my risk reward can be. That's probably the better terminology, the better way to word this. So I'm looking at that. And I really don't have 2 things that are true at the same time, right? There's no mutual agreement that we're squeezing off the 15-minute time frame and we're squeezing off of the 3-minute time frame. I don't see that. You'll generally find, in my experience, that you will never have everything lined up at the same time. Generally doesn't work that way. But what I use as just 2 additional levels of confirmation, you don't have to agree with me, but I'm using something called the volatility index, the CBOE volatility index. So I'm using this, and as we are trading throughout the session, all right, this is the price action for today. This is roughly the sell-off that I saw during the morning session. As I start to see that the VIX is rolling off, I'm making a conclusion in my mind that's on the 3-minute time frame. VIX is selling off, so I might get some upward pressure here. That's exactly what happened. So now we're talking about 4 different factors. And just to add insult to injury, you don't have to put the cumulative index on your chart. You don't have to do that. It's just an additional level of confirmation that I generally look at and say, okay, 4 things, 5 things are lining up. Probably want to fire on this signal. That's what I did. Now, I'm going to tell you how I managed the stop loss because even though this was an actual trade, we can use this as a trading example. Not enough of you guys do this. Not enough of you guys are reverse engineering your trades and reviewing your trades so you can become better traders on a daily basis. Most of you are coming to the trading floor and you're saying, let's see how it goes. You have 5 minutes of prep and then you're seeing, okay, there's an engulfing candle here. There's that, but there's not really a lot of quantitative analysis, right? There's not a lot of preparation. That's what I'm trying to do with you guys now. So how did I manage my stop loss? I will admit that I got stopped out on this trade, and I managed it fairly aggressively. So my stop loss is usually trailing by about 30, 40 points. I got in. Per contract, I'm looking to lose $500 on each ES or NQ position that I'm looking to take. So $500 is a lot of money for sure. If I'm taking 3 contracts, $1,500 on, a silly little mistake can be detrimental. If I'm doing 3, 4, 5 trades like this, I can lose $5,000 pretty quickly. So what I did is generally I'm looking to move up the stop loss pretty quickly. If I notice that the trade is already in profit, and at this point in time I was up several hundred, if not several, maybe $2,500. I'm like, okay, I don't want that trade to run away from me. That's the worst feeling in the world. So what I did is I moved up my stop loss. Where do you think I moved up my stop loss to? This should make sense to you. I moved it up to break even, because if I get stopped out on the trade, at least it wasn't a loss. That's how I think about things. If you think about it differently, that's fine. I'm just sharing with you what I do. I got stopped out on that very, very stupid wick, right? Curse that wick. But I got stopped out. However, I decided that I wanted to come back into this trade because the squeeze was still firing. We held the 21, but I didn't get back right when we were touching the 21. That would be ridiculous for me to say. I got back in when we were looking to break high of day. So I got back at 0.90. That was my entry. So 0.90 when we were breaking, that's where I took a trade based off of just some continuation. Had I not moved my stop loss aggressively, then I wouldn't have been stopped. I would have caught this entire move. This would have been, 140 point move. So that's great. I'm not the kind of person that will complain about hitting a stop loss at break even. I don't do that. If you do that, then that's fine. Right? We're different people. That's perfectly fine. I'm just telling you, looking at this from using more emotional intelligence and focusing more on either catching a move or just focusing on the next entry that I'm looking to get into. If I didn't take a substantial loss, then why not? Why can't I go back in? I saw that we were might be breaking the high of day for the session, right? Because I saw a rejection here. And then I saw a rejection here once again. So as soon as we were looking to retest that high of day, I took the position and I was waiting to target what's called a fire line. So this is not a level that I put on the chart, but it's a level that I use as my intermittent areas, either my support or my resistance. I really hope that I'm explaining this correctly and that you guys are able to see this, right? Like I said just a couple minutes ago, I want this to be a repeatable process. I don't want it to be, trying to go by feel. I don't think that that's really too advantageous. Your feel is only as good as, your luck is going to eventually run out. I don't want to trade off of luck. I want to trade off of a system. So I had that. That was my target. Where do you think that I trimmed my trade? I trimmed my trade up here. Where do you think that I set my stop loss? I set my stop loss as soon as we got to a comfortable enough area where I had enough profit, and then I tagged that trade roughly about there. Okay, roughly about there. So I made some good money on this trade, right? I took 3 contracts on the minis, and then I just trailed the stop loss. So that was a good trade. Now, immediately after that, I took a short position. So immediately after I took the long position here, I jumped into a short. Let me explain this. Everything that I said in terms of confluence factors, take all of that and let's apply that to the short position. This is literally what I did. I took a little bit of a smaller position because I didn't want to risk too much. Let's get that back. I didn't want to risk too much. So I took 2 contracts at this point. But everything that I said, let's flip that on its head. I'm taking the 5 and the 21. They're crossing. And let's just check out where the squeeze is firing. So the squeeze looks like now it's firing to the downside. How do I know that? We have a loss of momentum here from the top, right? You can clearly see that. And then we're going to cross the histogram line. And we only start firing on the squeeze when we get back down to, I think we got back to 0.95. But I took my trigger. This is important because everything else is just conditions. Conditions just means you're looking at the weather and you're just seeing, is it going to rain today? Is it not going to rain? Is it sunny? Blah. These are all conditions. If the conditions are conducive, you're waiting just for your trigger to tell you, all right, now I'm firing. Why do you think I fired on that trade? As soon as we were overcoming the 5, let me try to zoom into that so you guys can see a very, very clear picture of this. As soon as I'm starting to overcome, my entry on this was I think it was 140. It was either 140 or 143. I have to check my activity. But let's call it 140. As soon as I start to break below the 21-day moving average, I already know that the risk reward is good because I've been doing this a long time. But let me prove my point. How do I know the risk reward is good? Let's just say, boom. And I'm setting my stop loss at about there. And then I'm looking at my target. My target was lower. My target was like something like that. Actually, now looking back at this, that I'm doing a live trade review, my target probably should have been 090, right where I took my entry. So that's a pretty decent move. Let's see how much. Let's see how many points that I made on that trade. Okay, about almost 48 points. Okay, reasonable. It's reasonable. I rode this longer. I rode this all the way back down here. I got wicked out of that candle. So I already have my target area. My target area, admittedly, now I'm very glad that I'm doing this trading review, but my target was all the way down here. So I got back down, I hit my target, and then I moved my stop loss at approximately there, right? It was already a good enough move. So why not? Why not? You might think, I'm going to do this a little bit differently than this bozo, because this bozo doesn't know what he's doing. That's fine. I'm just sharing with you. I want you to really pay attention. It's about the same conditions over and over. Did I know that this was going to be, let's just check that out. Did I know that that was going to be about an 80-point move to the downside? No, of course I didn't know. I'm just looking at risk reward and applying the stop loss principles where I'm not moving the stop loss away from what my entry is. That's ridiculous, right? Because now your risk reward, you're messing with your risk reward. You don't want to do that. You want to always manage your stop loss at least to the point where you get either a very small loss or a break even. If you're giving up some profit, this is going to be the subjective thing in trading. This is the thing that people constantly debate about. How aggressively do you move up your stop loss? Do you know? Do you not know? It's all very subjective. This is why the discretionary part of trading exists, or else all of us would be trading, with robots. That's not what we're doing. So in this sense, I took that trade. I got stopped out at I got stopped out at 062. Right? I wasn't looking at perfect round numbers, but that was my stop loss area. So I'm already coming off of 3 winners, literally 3 winners. Now I'm going to share with you where I took a trade, where I lost. Hopefully I have some continuity and you understand, okay, so I understand where he took these trades. Maybe, maybe he's bullshitting me. Maybe he's saying these kinds of things just because there was decent price action here. Let's test that theory. I took this trade right here off of the same condition. I thought that I was coming into some momentum, and then I took the 5 and the 21. So I took this trade, and I made just little point gain. As soon as we started overcoming, right? Let's see exactly how many points we moved off of my particular entry. My entry was perfect here. So we moved, we moved almost 60 points off this trade. Where do you think that I moved that stop loss to? That stop loss was moved into maybe about 20, 30 points in gain. But ultimately, on this trade, I got stopped out. Tiny little winner, right? On this trade, made $650. So it was a tiny winner comparative to the other trades that I took. $650. It's literally what it was. So just took one contract, right? Because I was already playing with profits here. I did 3 here. I did 2 here. Then I did 1 here. Don't want to squeeze too much out of it because I'm already in a gain, right? If you're trading a different trading system, that's okay. But I'm telling you how I do it. So I got stopped out on this trade. So some of you are going to say, okay, so I'm getting your moving average thing that you're telling me. This is, thousands of people do this on YouTube. What about here? Does that fit the condition for me to take a short position? I want to point this out because I think it's important. Do you have an oversold signal right here? Do you have the same condition right here in order for you to fire off of that short? No, you don't. I don't think that you do. So I didn't take the signal and shorted it all the way here to the bottom. Third time I'm saying this, I want to emphasize the point that you are looking for the extremes, either on the oversold side or the overbought side. If you can meet those conditions on the 5 or the 10-minute time frame, then you have something called a high probability setup. You don't know exactly what level is going to hit on the chart. No one does. But you can at least put yourself in the right mindset and in the right position that you may, not always, but you may exhaust a really good move either to the upside or to the downside following the conditions that I'm talking about. Cool? These are going to be for all the trading reviews that I do. I didn't take that short position. I didn't do that. But I did take this long position right here. So now looking at this, I can see where probably I should have cut my wins and just not traded anymore. I went into this trade, but I wasn't firing a good quality squeeze. I can definitely see that. So I was looking for a break of this structure, looking for a break above that supply area, because that's the short-term supply area. Really, the supply area for the day is right up here, right where the fire line is, but I digress. So I took that position, and this came to a break even. I took this a little bit late. I took this at roughly about 0.45. And then what happened is I moved quite nicely off the trade. I didn't want to choke it out too much, so I think this trade came out to a break even. I have to check the activity. But all in all, I don't think that the squeeze was firing all that well. It wasn't there. It wasn't there. So here, I probably should have pulled my punch, but I'm running on 3 winners so far, or 4 winners so far. So right here, fine, a break-even trade. I can accept that. I'm perfectly fine with a break-even trade. You're not going to see me complain about that. And then finally, same mistake that I made here, I made right here. So I took this long position. For me, I thought that there was some win in the sales there, but I was wrong. I was definitely wrong, right? Because we overcame the 5 and the 21, right? Right there. It's okay if you don't use 5 and 21, 9, 21, 9, 13. That's all you. That's all you. But for me, that's my trigger. So my trigger took me up. How many points did I move? And I did not manage this trade correctly. I really didn't. So I had a 60-point move in my hand, dude. It was there. It was right there. And look at that 3-minute time frame. It's absolutely perfect. But seems like I just took the moving average and I didn't really consider the squeeze. So what happened here on the squeeze? Check this out. Instead of doing the long position, I missed the opportunity on the short. Where is the short condition firing here for you to consider, a good risk reward trade? I would argue that you had a good condition being met. I'm going to point this out. Now looking back and reviewing my trades with you guys, probably going to say that that is a good condition right there. When we started firing off that candle, more than likely I would have taken this trade probably at about 0.60. I think 0.60 would have been reasonable. Why? Check out what this lines up with. Look at the squeeze down here below. So that lines up with that first green dot. So if I'm going to take that, right, I'm going to set up the right risk reward principles, right? Everything is about risk reward. If you think that trading is anything different than risk reward principles, you are sorely mistaken. So I'm going to set my stop loss at about there, and then I'm going to look to take that at my target area that I just put in down here. So that target area would probably take me at 0.15, and I would have hit it. It would have been a nice trade. I didn't take this trade, so I can't take the credit for this, but some of our members did. They're doing this because they're understanding my system and they know how it is that I trade. So if they understand how I trade, they're taking these and they're saying, okay, Sage. Now they're throwing it in my face and saying, yeah, what you're teaching makes sense. We're not going to hit home run trades every single time. No, we're trying to get singles and singles, or at least break even trades as consistently as possible. And then when I'm in a position where there's a good run to be had, I know how to manage it, right? So these are the trades that I took today. That's a recap of all the positions that I took today. Made good money today, right? I'm not going to say that I didn't. On my swing positions, not so well, right? My swing positions actually took, because I went long the market just a little bit below where we are now. So what I'm going to do going forward is I'm going to do the trade reviews for the day trades that I took, and I'll also do a separate review of things that I'm watching. So this way you can have 2 different points of contact for information. If you're more interested on the day trading side, I can do that. I can review my trades. This is also lining up for a pretty nice long signal here. I'm going to analyze this as soon as I'm done recording. And then I'm going to talk about certain setups that I'm looking at for the next coming days. So you guys will be able to have access to that content as well. Cool. So let's call it a day here. Hopefully you guys can get in enough of a habit where you're watching these videos, right? And you're starting to get it. I'm doing a good enough job in educating you on how to manage your risk more than managing your expectation of how much money you can make. The money will be made. You will make the money, but you have to be able to put at the forefront how much risk you are looking to incur for being in that position. It's the cost of doing business. You have to put yourself in a position where you can catch a long move or a short move that's gargantuan. But those little small losses that you keep on incurring, that's okay. They don't need to be that big, right? You look at my small account, I'm taking 20, 30, 40, $50 losses. I can do that because when I win pretty big. Cool? All right, thank you so much for watching this video, and we'll see you guys in the next video.